Alright, what is going on, everybody? Hope you guys are having the best day of your entire life. In this video, Alright, what is going on, everybody? Hope you guys are having the best day of your entire life. In this video, I'm gonna break down how I made $2,600 in just one day of trading, and took me about 30 minutes to do this. I took 3 different trades. One was on AMD and 2 were on QQQs, but these trades were really insane. By the way, if you see me looking down, I'm looking at my broker because I got my fill prices and everything open here, what time I got in and all sort of stuff, right? So now I took this trade, and it was one of those trades where I think there were a few things to learn. Now, I didn't want to make this video originally because I didn't make much money. I'm like, oh, nobody gonna watch the video because, you know, whatever. And then I'm like, you know what, but there's some stuff that you can pick from this video and probably gonna be best value for your time than you watching some random videos on the internet, just funny cat videos. we're gonna stay the same. All right. And I just had a bunch of time. I was like, oh yeah, you know what, let me just do it. All right, so 3 trades AMD and 2 trades on QQQs. Pretty good. AMD trade was a loser. I lost some money on it. And QQQs, both trades, one was on puts, that means one was on the downside. I made about 20%, and the other one was towards the upside. Literally in a matter of like 5 minutes or 10 minutes, I switched my bias towards the other side, and and the other trade towards the upside was 40% returns. Pretty insane, right? So that's why I always say, never ever get married to your one side or your bias. If you get biased, that's it, mate, you're done. You get biased, you're done on the day. Like, you're gonna take a massive loss, and it's not the best thing to do, especially as a day trader. You don't really want to do that, right? So shall we break this down? Let's do this. Let's go. All right, now first trade, as I said, was on AMD. So we'll break down the AMD trade, and then we'll jump to the QQQ trade. All right, now, so first things first, on this AMD trade, there were few lessons or few points that I want to talk about, which is the first point being is we're going to go over the stop loss principle. Okay, the principle behind stop loss. Now, I don't just mean like, oh, you need to take, like, we all know that you need to respect your stop losses. If you want to become a successful trader, you need to respect your stop loss. But how do you do it, right? So we're gonna go over that. All right, so that's first point. Let's go over the AMD trade. So the market was about to open. I saw this, like, literally there was no solid trend in the market on AMD. It's like everything was like pretty choppy. Look at this, it's going up, going down, up, down, up, down. There was nothing, right? Nothing fancy going on. But the point that can come here is 200 simple moving average. Now, if this is the first time you're watching this video and you do not know how to set this up, I'll really quickly help you. Okay, what you need to do is go on this indicator tabs, type moving average. All right, type moving average. So select moving average simple. When you select it, it will come up on your charts like this blue line. Double click, go to inputs. Instead of this 9, do 200, and rest everything can stay the same. You can change the settings to, you know, some whatever color you want. As you can see, that's the orange dotted line. I use the orange dotted line. So you go on orange, and in here you go on the circles, it becomes a dotted line. But that's what I do. All right, now I'll delete this because I don't want moving averages on my chart. All right, that's how you set it up. Now we'll talk about what's the purpose behind this. That was the reason, one of the reasons why I took this trade, which is why it's so important to go over this, right? Market opened. The market opened, AMD tried to break towards the pre-market low. It kind of did break the pre-market. Oh, actually it did break the pre-market low, but what happened was it got reclaimed really quickly. So the prices broke below, got reclaimed. Sweet, I didn't take a trade yet, right? I'm still waiting. And then I saw this price really went down. It bounced off again, right? And I'm just like, interesting. That, you know what that means? When the prices can bounce off a critical level couple times in a row, you know what that means? Yes, you're right. That means it's a solid level. That means it's a strong area right here, right? Why? Because price went there twice, and both times we got bounced off it. Right, and it's also pre-market area right here as well. We bounced off this in the pre-market a few times. So clearly this is a solid zone, right? That's why the buyers were coming in over and over again. As soon as the price goes down, buyers are like, uh-oh, where are you going? Push up. Price is going up. Wait, no problem. I'm still not watching this as such. I kind of made this plan, but there's no such plan to take a trade yet, right? And then price tried to break towards the upside. This 200 moving average, and 200 moving average is just a very, very solid resistance or support, whatever side you're trading on, right? So if it's sitting towards the downside, it'll act as a strong support. If it's sitting at the upside, it'll act as a strong resistance, right? And also the time frames. What are the time frames? So I'm trading on the 2-minute charts. Why? Before 10 o'clock, if I take a trade, I'm always on a 2-minute chart, because there's not enough candles for me to focus on just 5 minutes. 1-minute chart has too many candles. I'll go crazy if I watch 1-minute chart. It's like this. I go crazy. So 2 minutes is the perfect spot that I have figured out for myself. All right. So first point is the time frames. You need to have different time frames for different times of the day. I use 2-minute chart early in the morning, first half an hour. Then I use 5-minute chart for 10 o'clock to 11 o'clock. And then I use 10-minute chart for rest of the day, 11 to rest of the day when I'm trading. Right. So because all these trades were taken before 10 a.m., so we'll just stick with 2-minute charts and I'll break down the trades. Sweet. Now let's go with this. Prices tried to break 200 moving average, couldn't break. It failed. Right. Now, as I said, it acts as a strong resistance. I'm still not watching this trade. I'm not like, oh my god, let me go and trade this. No, I do not have enough data yet, or we are still kind of in an uptrend. You see what I'm saying? We are still in an uptrend. That what I mean by we're still in an uptrend, I mean is prices went from this 159.35 all the way up to 160.8ish, and it getting rejected. That's sweet, but we're still in an uptrend. Think about it, right? Up until we, have a big bearish candle, we are still in an uptrend. And what a lot of people make a mistake with their trading is they jump the gun early. Like, yeah, you might make money in this instance when the next candle happened. It went down, but they jumped the gun. It might have gone up as well. Nobody knows, right? But in this case, what happened? It broke below the pre-market low. It broke below the early morning demand area, and it went down. I'm just like, oh my god. It got rejected off the 200 moving average. It was kind of looking a little bit bullish, but it got rejected, and the sellers are in control fully. I'm just thinking to myself, oh my god, sellers are fully in control right now. This looks good, right? Looks good for the puts. But I'm a sort of trader. I don't just jump in puts right away. That's not what I do, right? So I'm like, okay, let's wait for a pullback, which is the point that you should always remember. Wait for pullbacks. Like, if you can wait for pullbacks, it automatically improves your win rate by big percentage. Just waiting for pullbacks after you have, after you kind of found out what you're going to trade, wait for a little entry. It's the best thing you'll do. And then, because this area was strong area before, look at this area. It was a strong area before, right? Why? Prices bounced off a few times. 1, 2, 3, 4, 5. 5 times. I'm like, okay, if it comes back, retest. Guess what? Next candle came back and retest this. And I'm just like, oh my god. Oh my god. Look at this. Green candle has less volume. This green candle has less volume compared to this red candle, right? Which it should be if it's a bearish setup, right? Green candles usually means bullish action. Red candles usually means bearish action. So you might be like, but green candles before that had strong. Yeah, market open volume always going to be nuts. All right. What matters is after that, like this candle. So it's always subjective, candle by candle. Previous candle, what the volume was. Not like 5 candles ago, what the volume was. That's very important. All right. So I saw this. I'm like, okay, we'll see what happens if it gives me entry. I'm a sort of trader again. I want to see a little confirmation. I can jump in and trade here. If you ask me, probably 1 year ago, I would have jumped in and trade here with puts, literally stop loss, somewhere around here. I would have jumped in, but market has changed over time, right? So now I wait for this particular candle's low break. My stop loss goes on this side. So now I do this. Now I wait for the pullback candle's low break, or if there's a towards the upside, I'll wait for, if there's a move like this, a candle, I'll wait for this. I'll wait for the break towards the upside right here. Stop loss is on the bottom. I have, over time, I became this trader now. Now, as soon as this breaks, my plan is to jump in puts. Sweet. I jump in puts. I'm in puts now. Interesting, right? I'm in puts. Pretty simple, yo. Pretty simple. Like, Don't think of like, because I told you this trade was a bearish trade, like a losing trade, but this trade was an insane trade. I waited. Like, it's not about, please put this in your head. A lot of people think this way. This is a trader, right? This is a trader. And they go, oh, a trading day, we'll say, trading day. They go, okay, was it a green trade or was it a red trade? Oh, it was a green trade. That means it's a good trade. It was a red trade. That means it was a bad trade. No. That's how losers freaking think. If it's a green trade, good trade. No. No. All right. But you know how winners think? You know how people who make a lot of money from trading think? This is how they think, all right? This is a trade, and they think, okay, did I follow my plan? Or other one is, did I not follow my plan? All right? Follow my plan, right? You got it. Now, this is a winner, and he goes, did I follow my plan? Yes. And was it a green trade? Okay. Was it a red trade? So green trade, sweet. That's what I deserve because I followed my plan. Was it a losing trade? Yes. It was still a good trade. I just followed my plan. Nothing else. Beautiful. And then winners take a trade when they did not follow their plan, and it goes both ways. Green trade or L trade. The green trade, they go, oh, this trade is green, right? They're like, oh my god, I got lucky. Fuck, I don't need to do this shit next time. If they take L trade, they go, that's what I deserve. So fuck, all right? But this is the distinction between losers and winners. Over time, winners, you will see that they are more inclined towards following their plan. They don't take trades for fun. Bro, trading is not fun. People think like trading is fun. I never understood, why do people make this such a huge fucking thing where market shut. They're like, oh, market shut. Saturday, market shut. And they post a meme where, oh, when's the market gonna open? I'm so bored. What? For me, trading is like one of those things. It's super boring. Like, think about it. This is your pants, and there's money in your pocket, right? This is you, right? Whatever, looks a little bit funny, but this is you. There's money, there's money in your pockets, and you literally go, all right, I'm about to risk my money that's already in my pocket, but potentially maybe I'll make money, maybe I won't. What? I already have this money in my pocket. I'm gonna risk this. Maybe I'll make, maybe I'll lose. Wait, how's that fun? How's that fun that you're risking your money? I know to a lot of people it's fun. To me, it's not. To me, it's like, okay, this is just a thing that I do. You know, people go, oh, I love trading. I love trading too. But it's just one of those things that I do. It's not like, oh my God, I will be married to trading. No, it's just one of those things that I do. It makes me money. It's free money. And that's what I do. So I'm not emotionally attached because I trade because I love trading. No, I trade because I know how to trade. I trade because I can make money from trading. I trade because I can, whatever money I make, I can invest this money to make me more money. So literally what I do, every single profit that I make, I put away some money for taxes. I invest the money. I use that money to literally generate more money. And then I live off this money. Or actually not even live off this money. I pay, again, put aside for taxes, invest back. And how much? I live way below my means, yo. I live way below my means. I think monthly expenses stretched out. Probably, I'm sorry, I'm going off track. My monthly expenses stretched out. I know it might be, some of y'all might be like, oh, nuts. But based on the amount of money that I make, I think my monthly expense is like 15K a month for the household. That's not much. I make way more than this with all my businesses. Way more. Like way more. I'm not even talking about 10 times more. I'm talking way more. You see what I'm saying? All I'm saying is I live way below my means. I keep investing back. And that's why for me, trading is not one of those things that I'm relying on money for. I invest. So it's not like one of those things where I'm like, oh my God, I'm going to go crazy. Which leads to me to follow my plan. Which leads me to think of trading like, did I follow my plan? Yes. Did I not follow my plan? It's still a good trade. See what I'm saying? This is how losers think, and this is how losers go down. You need to stop thinking like this. See what I'm saying? I'm sorry, I went a little off the track, but this was a very important point that we had to go over. Right now, I got into trade. This trade turned into a loser, but it was a beautiful trade, beautiful entry, beautiful everything. And I think I was up like 10% or whatever it was. I didn't take the profits. I was like, oh, I might go down to this 158.5 level, which was the hourly level that I drew on my charts. And also kind of for yesterday we were holding this area as well. So I was like, yeah, we might head down to this level. I'll take profits there a little bit. I didn't take profits. Stop loss is still sitting there. And the next candle, it literally pushed towards the upside, and I got out. I got out at my stop loss. Now, the moment I got out, the next candle was bearish. I got out. That's okay. Now, you know the mistake that where I said I'm going to go with stop loss principle, there was a thing that I said I'm going to go with stop loss principle, right? Stop loss principle. Now, mistake that a lot of people make with their stop loss principles is this, all right? If you do not respect your stop loss once, if you don't respect your stop loss once, you're not going to respect it again when you have to, all right? I'll show you what happens. What basically happens is, let's say you wrecked your habit because you were meant to take a stop loss, but you didn't, but the stock reversed. And now you're like, to your brain is like, oh my God, if it hits my stop loss, it's not such a big deal. I can just hold through it and I'll make money. Let me just add to this. But then what happens later on is it comes down again. And now you're like, I'll bounce again. Let me just add a little bit. Oh, let me add a little bit. Let me add a little bit. And let me add a little bit. And let me add. And you blow your account. So it's very important to never train your brain to think like it's okay to not follow the rules. It's okay to no, it's not okay. You need to, if you want to survive as a trader for a little bit longer than you think you want to make some money, bro, you need to respect the stock. I got out here. Now, if I would not have gotten out, I would have made a bunch of money, right? Yeah. But no, any money, write this down. Any money that you make without being disciplined in the stock market will eventually go back to the market. Super important. It's really, really important. Any money that you make without being disciplined in the stock market will eventually go back to the market. Be it now or be it 6 months from now. I'm sure you know what I'm talking about. Any money that you make without being disciplined in the market will go back now or 6 months from now. And this is what happened, yo. Look at this, right? You would not have respected the stop loss. You're like, oh my God, I just got paid. And then it started bouncing again, right? It started bouncing again. And now you're like, oh, it's not a big deal, yo. And I can hold through this. And this is what happens. And it doesn't stop. It doesn't stop. Now, what do? You sit there and hope, maybe God will look after me. No, bro, God got better things to do. You see what I'm saying? So this is why I always say that you need to respect your stop loss. Doesn't matter what happens after you hit your stop loss. Sweet. Yeah, I was angry too. The price went down, but that doesn't mean I'm doing something on that anger, right? When people go, oh, don't have emotions. Of course you're going to have emotions. You're always going to have emotions when you're trading. But over time, you're going to realize that every time you trade based off emotions, that don't end well. So you get a chance to master your emotions because the market makes you, learn this shit. So I had emotions too when the stock started going in my favor, but I was stopped out. I'm like, oh my God, man, what the heck did I do? Right? But that doesn't mean I did something about that emotions. That's what is the difference between a normal trader and a trader who makes a lot of money, right? A trader who makes a lot of money, he knows how to just calm the fuck down. It's okay. Just relax, chill, easy, no problem, no stress. You see what I'm saying? Sweet. Now, let's go over the QQQ trade. I'm sure you learned a little bit from this, all right? Which is good. Now, let's go over the QQQ trade. QQQ's market's about to open. As I said, I took two different trades. And one was on puts, one was on calls. And the difference between these puts and calls plays was literally about 5 minutes. That means I flipped my buyers so quick. I flipped my buyers from puts to calls just because there was money to be made. And I was green on both sides. I was green on puts, I was green on calls, and I made money on both sides, right? Let's go over this, all right? So QQQ's trade, market about to open. It was not something that I was watching right at the market open, not gonna lie. It was like, yeah, whatever. It was not something that I was super excited about right at the market open, just whatever. But then we started seeing a little rejection. And the point that I want to break down here is very freaking important point. You learn this is one indicator which will help you out a lot. And the indicator is called open price. What is open price? Open price is when the market opens the first print of the day. 9:30 is when the market opens. So this is 9:30. the full, like as soon as this candle closes in the pre-market, it closes like, let's say like this. As soon as the first candle opens, so it opens here, right? It opens here. That point, this point right here is open price. See what I'm saying? Then it goes, makes a green candle, whatever, makes a red candle next, whatever. But this point where it opened, that's an open price, the first point of the day. And that is one of the most respectful level that you will have on intraday basis. One of the most respectful level as a support level, as a resistance level, one of the most fucking important levels. All right, now that's out of the way. Let's go over and let me show you like this. You see this yellow line? This is open price. Let me show you which indicator it is. All right, so you go search open price, and this dude called this country. Okay, you click this, right? There will be a bunch of weird lines on your charts like this, the dotted lines on your charts. You click this, you go yearly open off, monthly open off, weekly open off, everything off, right? You can keep the daily open because we're going to use it, right? I don't like this dotted lines. I like as a line, all right? And visibility, like you don't want this line on anything other than day trading because it's daily open, right? So I have it 1 to 15 minutes as my settings, and that's what it is, right? I'll show you. Let me delete this indicator. I'll show you my settings so you can just pause the video and do this. 1 to 15 minutes style. This is the color that I use. This is the opacity that I have, and this is the line, and these are the settings that I have. So right, this will become the level that I always watch on the intraday basis. I'll break it down. So open price is done, but there's a way to trade open price, which is you wait for the open price to break and then wait for the retest and then look for the entry towards either side. If it does this, you do this. You see what I'm saying? But rather the market open, not straight away, of course, not straight away. But if it comes back and retest, like, you know, later on in the day, I like this. I like these. This is very profitable, yo. This is insanely profitable. I'll show you. All right. So this is done. I saw price comes down. I'm like, okay, this is at the open price. Let's see if it fails below the open price. Then it's going to be bearish. It is bearish straight away, right? Why? Because it already started making a move towards the downside and it's coming down from 479.2. And if it breaks below this, literally mark, this is where the market opened. That means on a daily chart. Now, this is the point. That means on a daily chart, this is where the market opens. As soon as it goes up, it's a green candle. But when it comes down from that, it starts being a red candle with a wick on the top. So this on a daily chart is like, looks like a wick, and it'll start being red. And whenever there's a red candle on a daily chart, straight away it's bearish, right? Now, this was the plan. Yeah, this was the plan originally, all right? So I'm like, okay, let's see if it breaks below. Now, I'm not still watching for play. And we saw a little retest, no problem, and then it broke below. I'm like, okay. Now let's see if it gives me a little pullback and retests this open price, right? Open price, this level, whichever level it is. What I am thinking of is if it gives me a pullback. But it gave me a pullback, broke the pre-market low, gave me a pullback, and somehow it managed to retest the open price. I was watching this. I'm like, oh my God, this looks insane. Like this is nice. Now, next level that I have is 477 on my charts. So I'm like, okay, if I have to enter my puts here, stop loss going to be right here. All right, my profit target's here. Now, is that a good trade? Yes, I'm risking about what? I'm risking 60 cents, 70 cents to 60 cents actually to potentially make 60 cents. Yes, that's 1-to-1 risk to reward. Now, a lot of people will tell you, oh, 1-to-1 risk to reward is no good. What? If your win rate's 50/50, then 1-to-1 is no good. My win rate's 90%, yo. 1-to-1, that means out of 90%, that means 90 out of 100 trades are green. Even if I take just 1-to-1 trades, that means on 90 trades, I'm going to make $1. On 10 trades that I lose money on, I'm going to lose $1. That means 90 and 10, if you minus this, I'm still $80 green. People will say all sort of weird shit to you. All right, this is the whole goal of why I make these videos, because this is what matters. People will say all sort of weird crap. Oh, it has to be 2-1, 3-1. No, your win rate has to be better. You see what I'm saying? You can you can literally take a 5-1 trade, like 5-1, but when it hits your stop loss, every single time you take a trade, your confidence is gonna go down. When your confidence goes down, that also means your money is going down. And when your money goes down, you feel like shit. And when you feel like shit, you can't take a next trade, better trade. So that's why your win rate needs to be up. So your confidence is up. That means your money is slowly going up. That means you're able to take better trades. That means you have a more conviction to take the trades. That means you're able to get rich. So it's not about the fucking 1-1, 5-1, 10-1, whatever fuck people say, bro. It's more about your win rate. What's your win rate? What's your system? What's your system looks like? I have honed my system. I have been trading the system for a long time. I have made my system. I have backtested thousands of trades. I know my win rate. I know the numbers. I know the data. I know it. So I'm able to take the trade with a lot of conviction. See what I'm saying? And that's why I'm able to make all the money, because I know the numbers. I know the data. I know how much it cost me as a losing trade, how much it makes me on an average on a winning trade. See what I'm saying? So now this is a trade. I'm sorry, I get carried away, but hey, you get the drill. And this was a trade, and the market went down. Sweet, beautiful trade, beautiful trade, right? Now, which is the next point that I want to discuss, is negative risk management. I'm sure if you've been watching my videos for a few times, there's a thing called negative risk management, and negative risk management is super simple. All right, negative risk management is, let's say if you took the trade on QQQs with 20 contracts, for example, I'm just giving an example, right? It's your first profit target. So it hits your first profit target 477. You took this trade here. It hits your first profit target. You take out 10. You take 10 off. So let's say, for example, you made $60 on a contract on 10. You made $600. Sweet. But you're still holding 10. So if your entry point was 120, whatever, now the price is trading at 180, $60, right? Made $600 already. This is in your pocket already. Any trade that makes you money on one first profit taken should never turn into a loser. Just put this in your head, all right? And then if this stock started bouncing, your stop loss on the remainder of the contracts, like you have 10 contracts running, your stop loss on these 10 contracts, you know what your stop loss should be? Your stop loss should be break even on the option contract. So literally in your system, put it down as 120 stop loss. That's it. Just don't even worry about it. If it goes, you will make way more money. If it hits your stop loss, guess what? You do not lose any of the 600. You get to keep the money in that pocket. So it's called negative risk management. That means you get to hold these runners with zero risk. Like zero risk, like no risk. If it goes down whole day and these contracts from $20 gets to $10, that means $800, let's say, for a contract, and along the journey you kept taking profits and you still have 2 contracts running, bro. Let's say you make 2,000 on these 10 contracts and you'd make 600 of before. Now you made $2,600. Like, this 2K is free money because you practiced negative risk management, because you had zero fucking risk on this. This is why I love it so much. All right, what happened? I'm holding my runs as a negative risk management. I'm like, sweet, if it hits my stop loss, hits my stop loss. And next candle straight away. Next candle straight away hits my stop loss. I get out. No problem, right? There will be a few days every now and then where you take big trades because of this. I'm waiting because it has zero risk. I'm just waiting for those days to come by. And whenever those days come by, what happens? I make a lot of money. Zero risk anyway. So this was a QQQ trade, and now I'm like, okay, I got out, sweet, no problem. Price started bouncing up a little bit. I'm like, okay, let's see if it breaks the open price. It broke the open price. I'm like, oh yeah. Now open price breaks. What did I say? Open price breaks. If it comes back retest, it can be a good, beautiful entry. What happened? I got a retest on open price. I'm just looking at this. I'm like, oh my goodness. This is freaking nuts. This is insane. This is beautiful. Right? Open price broke, retest. Like, this looks good. Where's my entry? My entry is the break of this particular candle, right? This candle. Where's my stop loss? My stop loss is right below this particular candle, the pullback candle, right? Right, this candle. Now, pullback doesn't have to be same color as long as it's contained within the previous candle, whatever, right? Anyway, now my profit target is sitting at, let me show you. So I am entering here, my stop loss is here, my first profit target's gonna be high of the day. Now I'm risking about 30 cents to potentially make 70 cents. Beautiful trade. Over $2 risk to reward. That means I'm risking $1 to make 2. With my win rate, I'm like, shit, I'm gonna do it, right? And then next profit target that I have is 200 moving average. As I explained on AMD trade before as well, 200 moving average can be a strong resistance. I'm like, okay, I'm gonna get out a remainder at the 200 moving average, and of course the remainder can be as the negative risk management. Pretty honed in. I've honed in the system, right? Now the system's big. System's all about levels, how to see trends, how to see the patience candles. Then the system is how to select the option contracts, which option contracts to select, when to jump in, when to jump out, how to do negative risk management, how to do stop loss strategy, how to do profit target strategy. And there's so much stuff that goes in the system. How to do Fibonacci extension strategies, how to do reversal strategies. Oh my God, the system's big, huge, right? But this is one of the part of the systems, and that's why I'm breaking this. And I'm giving you full sauce. I'm not holding nothing down. You see what I'm saying? I want you to make money. Go make some money. Like legit, go make some money. Right? Why do I care? All right. Keeping it real. You wanna know the truth? All right. Go make some money. You go make money. It doesn't affect my shit. My strategy is still gonna work. You see what I'm saying? You use this strategy, you make money. It's not gonna change my life, but it's gonna change your life. If anybody would have made these videos what I'm making now when I started trading, man, oh, bro, it would be nuts. I would have been nuts by now. It would be crazy. And I'm doing it more for networking, to be honest. I get sometimes messages from people be like, oh, bro, I used your strategies and I made like 5,000. Anytime you come to Vegas, I got you, man. Wait, here's my number. I saved the number. Sweet. Now, actually, I needed something get done in New York City, and one of the dudes who been reaching out to me on Instagram, and I told him like, bro, can you go get this thing from one of my mates, good friend of mine, and do this? No problem. He literally drove for I think it was 65 something minutes, over an hour. He drove from his house, got the shit done. Then he had to go another place where it was about another 2 hours. Then he drove back to his home. All because he learned a lot of stuff from my videos. Interesting, eh? Networking. So, this was a trade. Sweet. Now, started working. I'm in the trade now. Right? Profit target. This is the first profit target. Next profit target. This is the next profit target. Sweet. No problem. Bam! Bam, 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 bam. Just like that. 40% returns. Bam! See what I'm saying? Oh, man. Beautiful, right? Beautiful. And this was the second trade, and again, I took some profits here, and remainder was negative risk management, and it came down, right? Negative risk management, and now there's another thing that, all my students will understand why this trade didn't work, because of the FOMO phase. Check out the volume, but I'm not going to break that down, otherwise this video going to be like literally 7 hours long. But there was a FOMO phase, and which is why price started reversing. Basically, what I mean, and really quickly I'll break down, is price made new highs, but the volume was not able to make new highs. So that means price is getting weaker and weaker. There's a lot of FOMO coming in, and smart money gonna trap a lot of people. And then my stop loss got triggered, and I got out, and I'm done for the day. I didn't make a lot of money. I only made $2,600. Didn't make a lot of money, but they were beautiful trades. Right? So, by the way, if you don't know who I am, my name is Somesh. I'm a full-time day trader, and I make these videos just so I can help you out a little bit with the money, getting the bag. If you like this stuff, again, I'm not a YouTuber. I don't know how to leave the cliffhangers at the end of the video so you can watch my next video. I'm a day trader. I make content for fun, but I'm a day trader first. Second is where I make content. So I don't know what to say right now, so you can subscribe to the channel. Let me know in the comments down below if you find these videos more valuable than the courses that you buy. All right? If there's any course that you buy, oh my God, and you get less value from those than these videos, bro, I wish you good luck. Oh my God, I don't know what to say. But let me know in the comments down below if you enjoy these videos. Let me know what was the one thing that you learned, and subscribe to the channel. I don't know if liking the video helps with the engagement. Why not? Just throw a fucking like. And I'm out. Peace. All right. Goodbye. Thank you.